we get to read, though, from our three musketeers, my swashbuckling investment pros who all sort of became less swashbuckling, all retreated to the safety and comfort of quality, which, by the way, has been a smart move. I want to know when it's going to be time to get more aggressive. Bringing in Kenny Polcari, Rob Luna, and Eddie Ghabour. All right, so major indices have been locked in a trading range. We know that. And what really has been the key, for them, the pendulum rather, for them going back to the bottom of the range or up, has been that 50-day moving average. Now, why don't we take a look at the S&P 500, because here's your moving averages right here. We're above the 50, and we're right at the 200-day moving average in the S&P 500. Folks, if we get above there, I think it's going to be huge, and this is your real big test. That's 46.50. That is the breakout. Now, I want to go to you, Eddie, because you have been very bearish, and I know it's based mostly on fundamentals, not charts. But if we get this breakout I'm talking about, would you begin to reconsider?
Look, I think if we get that breakout, you absolutely have to reconsider. I don't think we're going to get that breakout. I think this second quarter is going to be the toughest of them all, and then we'll have some better opportunities in the third or fourth quarter because this earnings season, this coming up, is going to be very tough. Look, I've been very vocal about this. I'm very rarely this bearish, but this setup is one of the worst I've seen in my career. When you look at the overall dynamics here, I think right now our number one job needs to be protecting hard-earned capital and setting up for the next move to take advantage of some great opportunities.
All right, real quick, what do you consider to be quality? How do you weather the storm?
So we've rotated from tech and small caps to utilities, staples, healthcare, and metals. That's the only equity positions that we have right now in our tactical strategies. They've worked well. I think they're going to continue to be leaders here in the next 3 months.
The spike, once again, in that 10-year yield, first it knocked the NASDAQ down, and then the rest of the indices have followed suit. We've seen this over and over and over again. If we do get that sort of shift, if it does feel like, okay, we know what's coming, it's a hell of a blow, but we're prepped for it, what would that mean for the markets?
So look, here's the problem with the Fed right now, which is why, again, I'm going to be on the other side here. They've never been this aggressive in this short a period of time, and they've never been this late to the cycle in regards to doing this. The economy is already slowing down, and now they're going to increase rate hikes and tighten at a historic rate. I don't see how we get through this if they truly are trying to get inflation down to their mandate without breaking something. Right. So it's a very dangerous place to be in right now. That's my opinion. I
love it. I love this. We're getting smart stuff on both sides. Real quick, Eddie, I got time for you to squeeze your thoughts in there.
Look, Elon is going to go down as one of the best entrepreneurs in history and one of the biggest innovators in time. And I agree with Rob. He's a winner, and that's why he's got a lot of haters, because haters hate winners for some reason. But I would be behind him 100%.
I always say, don't hate the player, hate the game. You guys are fun. The swashbucklers are back. I love it. Kenny, Eddie, Rob. All right, folks, we'll talk to you again.